Welcome, everyone, to Advantaged, a High Alpha Innovation podcast. I'm Drew Beechler, our VP of Marketing here at High Alpha Innovation, and your host of Advantaged. If you aren't familiar, High Alpha Innovation is a venture builder, and we partner with leading organizations and entrepreneurs to co-create advantaged startups, hence the title of this podcast. And this episode in particular is part of our 2025 Innovation Trends mini-series that we're doing as our first inaugural podcast. We recently published an article that kind of dove into top trends and specifically kind of where we think the innovation landscape will be shaped as we come into the new year here in 2025. And we decided as we were kind of going through this that we wanted to turn this into more concrete discussions with a number of our team members to go deeper on these trends and where things are heading in the new year. And so today, here with me, I'm super excited. We have our Managing Director of Studios, Ryan Larkham, our SVP of Partnerships, Morgan Berman, and Nick Wickert, our Business Development Manager. Morgan and myself actually started almost nearly on the same day, so we are newer to High Alpha Innovation. Ryan and Nick are OGs and have been here for quite some time. In lieu of kind of doing more like broader, deep intros, but maybe like if each of you just want to give a 10 or 30 second introduction of your background or experience and kind of maybe what you do here at High Alpha Innovation, just to give some context to kind of the discussion we're going to have, that'd be really, really great. I'll start with Morgan here.
Yeah, great. Thanks for having me. So my name is Morgan Berman. I've been with High Alpha Innovation for 5-6 months now. Responsible for partnership. So basically that means working with our corporate, government, university, investor, family offices. They're thinking about innovation, thinking about getting closer to the startup ecosystem, building new programs with them. Prior to this, I was on the partnership side of Techstars, so very familiar with startup ecosystems globally. I mentor startups across the world. I've had a couple companies, some good, some not so good, and just have a deep love for entrepreneurship and all things startup.
Awesome. I'm Ryan Larkham, Managing Director of Studios here at High Alpha Innovation. Been here for about 4 years now, and in my role, I oversee our studios. So studios are enduring funds that are focused on usually a specific sector and launching a portfolio of startups inside of that sector for a group of LPs who are excited about driving transformation inside of that sector. In previous worlds before this, I was in corporate strategy, corporate innovation, product development at a lot of big cos. So I understand the need for large corporations to innovate outside the core and the struggles and challenges that they face beyond that.
All right, I'll round it out. So my name is Nick Wickert. I'm on the partnerships team here at High Alpha Innovation. Been here for about 4 years now. Joined partnerships about 7 months ago to help kick that group off. I did spend 3 years prior to that on our build team, so working with our corporations and universities to bring concepts to reality, back of napkin all the way through first investments. Prior to joining High Alpha Innovation, I led innovation at a large financial services company for about 7 years, from helping start our venture fund to starting an internal accelerator, a venture studio. Also ran a seed accelerator in partnership with the White House and Veterans Administration, bridging the gap between active duty military men and women to life of entrepreneurship. And so have been in the early stage startup space, both as an investor, as an entrepreneur myself, and then also with a long enough stint inside of corporate innovation to understand the trajectory of where they've been going the last few years.
I love that. I love our team. Our team is so special. It's so cool. Like we talk about this a lot of like just the backgrounds within our team and like the blend of people with former founders and investors and people with deep corporate innovation and corporate strategy experience. And I think that we just live in this really, really unique space of this blending of experiences. It's really, really unique, I think. Anyway, it's just really fun to kind of hear all of your backgrounds. And I think that this, hopefully kind of our discussion today will really show the uniqueness that that brings out. And today, what I really want to discuss and what hopefully kind of we'll get into is just the evolution that we've seen, particularly really in the last, it's been, I feel like, dramatic in the last 2 years, maybe even call it, around corporate innovation, and particularly the lens of what I like to call startup engagement. So how are big companies engaging with startups, and kind of how is that changing? How is it evolving? I think we've seen a lot of models over the years and a lot of kind of evolution around this of like, what does this look like in the corporate perspective? What's working, what's not working? How should we be shifting your focuses, et cetera? And so that's really what we kind of want to talk about here today. And maybe just to kind of like kick it off is a phrase we use a lot internally is called innovation theater. And in particular, our CEO, Elliot Parker, wrote a book all kind of around this called The Illusion of Innovation. So maybe kind of let's just kick it off with that. Like, do we think last year, did we start to see corporations kind of move more beyond this illusion of innovation, this innovation theater, as we kind of define it? And do we think we'll move beyond that even more so here in 2025?
I was going to say, maybe it's worth just kind of defining the term a little bit deeper, right? Innovation theater is a result of corporations facing the pressure of constantly needing to innovate, but not actually doing the activities that are necessary to drive the growth and outcomes that they want. And it's not their fault to some extent or another, right? Especially inside of publicly traded companies, they have this responsibility for short-term shareholder gains. And so that means that there's a constant sucking sound of the core that's necessary for the investment of those dollars into near-term activities that drive near-term gains. However, they still need to be able to drive long-term growth opportunities, which is challenging as a whole. So structurally, it's already difficult.
Yeah, and just to piggyback a little bit on that, I think from the startups and corporates working together, there is a tremendous amount of innovation theater that, quite frankly, waste both the corporate innovation team's time and the startup's time. And so there's a lot of things that have been done just in the name of innovation that doesn't yield any results. And so when we're thinking about, mentoring startups across the globe, giving them advice of, how do you look for a corporation that has dollars set aside for pilots or proof of concepts? And what sort of things can you, hang your hat on that's real, that's tangible, to kind of break through that illusion, as Elliot would say, of innovation?
But if you put it into perspective, the reality is that a lot of these corporations who have been around for 100 years have only been at startup engagement for 10, 15 years. So they're still learning. So we're on maybe the second or third kind of revolution of how do you actually work with startups. First, it was a lot of M&A and internal, and then it was accelerators, and then it was incubators. And so they've gone through their own kind of transformation of how do we do this? And I think the interesting thing is that in their lifespan, they're in their infancy when it comes to innovation and working with startups. And so I think a lot of us who have been there for the early days have seen what they've had to kind of break through to even get the conversation going, let alone make substantial changes to their business, which requires a lot of change management. And I think the evolution of this is going to persist, and it's going to be a matter of being able to keep up with how fast innovation needs to happen, and then how quickly you can work with startups, how quickly you can react to the market. And so they're learning just as much as a startup is learning in the market of how to engage.
It's so fascinating because I totally agree with everything you said. And the term innovation is so broad, right? It can mean so many different things. And if the corporation decides they need to innovate, and let's be honest, every corporation needs to innovate, right? We can point to the graveyard of failed corporations over history that failed to innovate. If they need to innovate, they have a whole stack of things they can do. They can do different things in the name of innovation. Working with startups is a sliver of that. And there's a lot of different flavors of how to do that. And I think sometimes the innovation or the illusion of that innovation is they want to just seem like they're doing a lot to justify their own business units rather than actually moving the business forward. So they need to think through, are they innovating at the core of their business? Are they innovating on the peripheral? Like, what are they actually, first, how are they defining innovation? And then what are they doing to push that forward a little bit?
And then finally, selecting the right tool. Once you know what you're doing, right? Are we using the right tool, whether it's CVC or M&A or R&D, to achieve the ends that they want?
And it's probably a mix.
Yeah.
But has innovation theater persisted because innovation as a general term and capability has been a science fair project for a VP of a particular department rather than a function and a capability that a company has not built out over the years?
Possibly. I mean, where I've seen it be successful is where it's actually ingrained and that innovation team or unit can see across different business units. So they have buy-in from different stakeholders across the enterprise, including the CVC team, the corporate venture capital team. Where I've seen it not be successful is where that innovation team is siloed. And that sometimes leads to more of that, like, okay, we're just doing something to look busy mentality, and can create that cycle of the illusion of innovation.
Maybe along those lines, Morgan and Nick, I know we've had kind of this conversation too, but like, are there ways that we've seen teams structured or reporting structures even, and maybe we can even get into even like metrics for success, but like whether it's reporting structures or goals or metrics, are there avenues that you think align the innovation team or that function more toward true innovation and out of this innovation theater perspective? Are there structures or metrics or reporting in place that like lends itself more to that or not, or is there more nuance there?
Well, I think Morgan alluded to it. Teams who have defined what outcomes they need to achieve from innovation tend to come from a position of a strategic lens. So then you can design your organization around that outcome. It's when the tail's wagging the dog and you have a technology organization or a product organization that is innovating in a silo that is trying to look across the business but doesn't have the support, where they run into a very limited lifespan of what they're doing. And so I think the first most important thing that any company can do is say, why does innovation need to exist and what do we need to get out of it? And that will drive the types of engagements you want to have with startups or internal innovation campaigns that you want to run. So to me, it's tell me what you want to get out of innovation. What is its job to do for your corporation? And then that drives a lot of the initial discussions.
It's so fascinating because a corporation, as Ryan pointed out, is judged on a quarterly clip, right? Do they make the numbers? Does the stock price go up? What do they do that affects what happens on Wall Street, which is so out of their control? And when you think about innovation, especially working with startups, you can define it and have it structured, but to measure it, you're talking 7 to 10 years from now, right? And so what I've seen be successful is how do you bring that future forward where you're saying, okay, we understand working with investing in startups is going to help us down the road. And yes, it might help us avoid becoming blockbuster, but at the same time, what kind of learnings can we get? How can we get that quote unquote startup juice? How can we have cultural transformation? How can we think differently? How can we move faster? And so to me, the companies that really internalize that and set up KPIs that are based on those sort of learnings, in addition to all the benefits. And yeah, if you invest in the next Airbnb, then that's great and everybody's happy. But that is a unicorn by definition, right? And so I think bringing that future forward and a way to think about how to measure that has been something I've seen that's been successful.
Yeah, I think that's great. I mean, tying those two pieces together, like really great corporate innovation, it cascades from really great corporate strategy. First, you got to know where your company's going and what you're great at, what you're right to win. Then you usually define a growth gap. In order to get from here to there, we need a certain amount of revenue. And some of that is attributable, as you said, you triage it. R&D, M&A, CVC, startups is a piece of that. And like you said, while you're casting the long vision for it, you're also trying to figure out what are the near-term benefits. And I would add to that list of near-term benefits, perhaps near-term revenue accretion. Now, that's a really high bar for very young startups often. But if it exposes you to new customers, if it gives you opportunities to try new transformative business models that you wouldn't want to do in the core because they would be cannibalizing to your business, there are ways that you can learn and still, quote, make money or achieve some of those growth objectives without yet entering that market.
Yeah.
Totally agree. And one thing just to add to that, when a startup comes to work with a corporation, it's really hard and it's really daunting. They don't know where to plug into that organization. They don't know how to find the right buyer or to find the pockets of money for pilots or proof of concept. So the organizations that have that defined and have the metrics and be able to help plug those startups in is very critical.
Funny, I think with all the kind of corporate innovation desire, it's so easy to want to build a team that does the fun and sexy stuff. Let's design startups. Let's invest in startups. The thing that I would say to corporate innovation teams actually is they need to do like the least sexy stuff, which is how do we integrate startups into the day-to-day of the organization? What would it take for me to identify needs from a business unit leader, help create ties back and forth between that business unit leader and startup, distract the legal and procurement team so that we can get fast NDAs, right, and rapid procurement? Those are hard things and super unsexy, and yet I think are probably the most critical things that corporations can be doing if they really want to be driving innovation inside from startups.
Yeah, I think it makes some of the biggest differences. I like to what you're saying, Ryan, as well, around you can define growth or revenue in a handful of different ways too. And yes, you shouldn't think this startup we invested in is going to exit next year. Like we need to have long-term time horizons and kind of an enduring capability, but think about it more holistically of, is this solving a pain point for us, for our customer within our supply chain? You know, this is a multi-million-dollar problem and that's going to be far more valuable probably to the corporation than return on invested capital might be within a particular startup even. And I think kind of having some of that lens can bring some of that near-term vision, but also have the long-term upside and kind of true transformative innovation potential.
Can I just tell a story real quick on that note?
Yeah.
We had a corporation come to us who had a $20 million IT problem. They couldn't figure out how to identify which of the parts were going to show up late to the factory that would also shut down the factory line. And they had analysts, of course, right? Procurement analysts whose job it was to triage their portfolio of products, 200, 300 at a time, deep in inboxes trying to solve this problem. And they were a very, very large supply chain organization. So we figured if they had this problem, everybody else would have this problem too. So wouldn't it be neat if there was a startup that could solve this problem? And they had looked, there wasn't available one on the market that could do this well. They were thinking about solving it themselves with a $20 million investment, but we all know like one-time projects don't solve problems. Startups, enduring businesses solve problems. So we launched a business with them. They became beta customer, first customer. We designed it for their first team. And inside 3 months ahead of data from a really successful startup org in the supply chain space and a really successful person actually from inside of their team who had previous startup experience, addressed the need for a single portfolio manager and saved millions of dollars essentially in flying parts on 7047s back and forth inside of their one portfolio. They rolled it out across their entire supply chain inside, and they became the biggest customer of this startup out of the gate. Now, this was right in the middle of the pandemic, so there was a lot of opportunity for pain. We were able to raise a huge seed round on that, and their investment 5x'd on that seed round. So instead of paying $20 million to solve a problem, they made money solving a problem that the market experienced, and they did as well.
That story and others is the recognition of the innovation team to do more than just look internally, though, right? They looked at what they knew and how they weren't going to be able to solve that. And so they pointed all the expertise that they had, the advantages they could bring, and said if we deployed that elsewhere in a startup, we could endow that thing with capabilities that a startup normally would not have. And so it was the foresight of that company to say, let's reconfigure how we're thinking about solving this issue and taking what we do know, which is supply chain. We know who all these folks are that are impacted, and point that strategically at a startup that said, if we give this to you, you can go and execute faster than we can. And so they did exactly what the innovation team was supposed to do. They identified the problem. They provided a ton of insight that would take months for a startup to even wrap their head around, assuming they could get access to it. And then they were able to build it. And so that innovation team did exactly what they were tasked to do. And it didn't require them to think horribly differently. It was just a reframing of how do I point what I'm already good at a different vehicle.
Yeah, I like that a lot. And I think sometimes when a company goes from an outside-in approach to innovation, sometimes it can lead to more illusion of innovation because they look at the ecosystem through their own lenses. And so what they need to do is work with not to have a plug, but work with some sort of partner who understands the venture ecosystem, who understands the startup ecosystem, how to create companies, and has a different perspective, if only to help them remove those glasses. Because what they are looking for, if they go out with their preconceived biases, they're looking for a hammer for their nails. And where the real innovation happens is the things they're not thinking about, right? What's 3, 5, 7 years from mainstream that's around the corner that they can get ahead of? And man, we never thought of that, and start innovating alongside those companies or build those companies that then can be ingrained in their business.
Yeah, that's a great point. Like a different version of that story could have ended with this company went out to the market and found a startup and forced them to solve just their problem, and that startup died.
Exactly.
This company decided to start a company that solved only their problem, and they were stuck funding it for the rest of their life. Instead, they found something that was market appropriate and gave them the speed and flexibility to go. And it turns out this company ended up pivoting. That the secret to this whole thing was that the parts that they needed weren't even in their supply chain's inventory, but in another neighboring supply chain across Guadalajara, Mexico. So the answer wasn't like better supply chain analytics. It was a marketplace for trading electronic components. No one would have been able to find that if they tried to try it on their own. A startup was able to find that because they were incentivized to go do it.
Yep, just back to who you're optimizing for. We talk about this a lot is learnings, optimizing for failure. And the faster you can fail, the faster you can learn. And that corporations are just they're not optimized to fail. But startups are like inherently designed to fail quickly and learn from those failures very, very fast. Where like the corporations, the innate kind of business of the corporation is to squash those failures and grind that out of the system, essentially, where that's where startups bring this beauty that I think can solve this in a very unique way.
When by grinding out the failures, they're also grinding out the learnings.
Yes,
right?
Exactly.
They are there to keep things safe. And unfortunately, safe doesn't mean learning fast.
But I would argue, there's been a lot of innovation teams who have hung their hat on, we exist to learn, right? And it goes back to measuring the success of your innovation team. And the problem with learning inside of a corporation is you get one spin of the wheel. And if what you learned doesn't help advance the ball, the instinct is to say, all right, it's not going to work. And so you've got a set of incentives that don't align to maximizing learning. Whereas the startup in this case learned, and instead of saying, well, this isn't exactly how we envisioned it, let's shut it down, they iterated and went to where the market was going and unlocked even greater insights. And so companies will try to learn. It's just the infrastructure, the antibodies aren't set up to have a series of feedback loops that can sustain learning until you do find that nugget that helps you scale. It's too quick to fail.
Yeah. The startup, the incentive there is if we don't learn, we die.
We're out of
the
business.
corporation,
We're going
like
home.
if we don't learn from this, we still ship parts tomorrow.
I got to email a bunch of investors and say, hey, the money's gone. We failed.
Yeah.
They're not going to do that. They're going to work as hard as they can to figure out, well, where is the market for this thing?
Yeah. It's that incentive alignment that is impossible within kind of the confines of the corporation, really. One other kind of trend and just kind of topic maybe we could discuss is two very specific arrows within this innovation quiver historically have been CVC and corporate venture capital arms and accelerator groups. We have a lot of experience here on the table, around the table, in actually both of these arenas. How do we think these will both kind of evolve over the coming year or, particularly we just got to have a conversation around fundraising. Last year broadly in startup world was up from 2023, still, nowhere near what we saw in 2021 and 2020, almost back to kind of pre-COVID levels. And we're kind of thinking that potentially this could be another year where we get back into the trend line kind of pre-COVID. But are we seeing the same thing in CVC? What is the impact both economy-wise or just broadly within kind of the innovation landscape that we're thinking we're going to see around accelerators and CVCs as two kind of startup engagement levers that have been very, very popular over the last decade, really?
Well, I think you characterized it right. That there was a massive downturn that occurred, which always causes corporations to pull back and direct capital to the core. And I think rather than just rushing back toward the previous levers they've used for innovation, I think it's causing folks just to pause and think and say, like, what have we learned through this process? And I think those in CVC have learned that you need to pair long-term financial outcomes with near-term strategic benefits. It needs to be more than learning, like Nick said. It needs to be more than long-term finance, like Morgan said. What can we do that's in between that helps us to see some kind of growth in between? So I think the CVCs that are making it through this turn are the ones that are figuring out how to broker deals with these startups, invest at a time when those startups actually can help them to grow, and vice versa, drive business efficiency improvements, solve problems for their customers. So I think it's just a different set of use cases perhaps for what we'll see, as well as kind of perhaps a slightly different stage to where they're investing.
Yeah, and on the accelerator point, I think accelerator means a lot of things to a lot of people.
Yeah.
Right. And how you define accelerator is very different. I do think from what I've seen, a lot of corporations have tried something in the world of accelerator, and they've used it in connection to their CVC. They've used it for learning. They've worked with partners like Techstars or 500 Global or others, and they've tried it. And an innovation team is usually where that accelerator plugs into the organization. An innovation team, by definition, needs to innovate. Right. So they've already tried it. They've tried that cycle. So now they're thinking, okay, what is next? And either next is they've internalized that accelerator, like take Disney, for example. They ran a program with Techstars for a couple years and then designed a later stage accelerator program that they're running in-house. And that's great, right? They took the learnings, they learned how to do that. Others look around and they say, okay, we need to do something else other than quote unquote just the accelerator because we need to keep innovating. And so innovation teams are constantly looking for that next thing that helps move the needle forward a little bit.
I think on the accelerator route too, over the last 10 years, the barrier to entry to be a startup is so low. And so what a lot of startups have figured out are the table stakes. And so a lot of these corporations are looking at going, well, great, we've seen 50 startups in this space, but they've got a handful of issues that are unbeknownst to startups. They're things that they don't want the market to know because it'll hurt the competitive angle in the market, their products. And so it's harder to solve corporations' needs because startups have been so efficient over the last 10 years at looking at the surface and saying, how do we solve this? A lot of successful startups have had folks who were previously in those corporations who spun out and said, I can solve this differently and I can do it through a startup. But for the most part, what I'm seeing now is that a lot of CVCs and the corporations are going, we've seen startups in this space the last 5 years. What's different? And it can't just be a technology play. And so figuring out a way to get a better view of what those corporations' issues are and solving more root and growth opportunities is going to be critical, but it's harder to do because you got to be embedded. You got to have insights. You got to have data. You got to know things that other people don't know. And that's really hard at scale to do. So the long and short of this is that corporations are going to work with fewer startups, but the startups they work with are going to be high quality. And they're going to have founders who've been in the space, and they're going to work with partners who understand how to navigate internally. Otherwise, they're going to see the same 50 startups come through that they've seen for the last few years.
Well, thank you all for joining me. This was an incredible conversation, and one that I hope we will continue for quite some time, both here and in other scenarios. But thank you so much for joining me. This is an incredible podcast. If you're listening, be sure to subscribe and follow along for the rest of this series and future conversations we have all around the illusion of innovation and what do we mean around building advantaged startups.